All right, maybe now we're good to go. So Sterling and I are actually together. Christy mentioned that, and we are in Kansas City, meeting with a larger group. We've got folks from really across the country and lots of different stories on the crop to report. Sterling, I think we've heard the good and the bad and the ugly so far, but a lot of fringe areas outside of Illinois and Iowa starting to deteriorate as far as the crop goes. I'm just curious. I know we got some folks from multiple states on here, whether you think this week was a improvement, decline, or neutral in your area. If you don't care, chat it in there. It's kind of interesting to see as we wait on the WASDE today. We do virtual crop tour accounts each week, and last week, if you guys read that, Mike Toohill mentioned that it was the crop got bigger in the United States, and I think we kind of agree with that. This week, it feels like it's a little more of a neutral week. Mike and I were just talking about that. Mike is actually here too. He's in the background. You may see him every once in a while, but more of a neutral week. But we're starting to hear of some problem areas become more magnified out there, Sterling. We've got Kentucky, Tennessee that are not bad, but not great. They got problems. Indiana seems to fit in that category. Southern Ohio seems to fit in that category. Areas in Kansas and Missouri. As we drove out here from Illinois, we saw some challenging spots in Missouri. So I'm just curious what you think, whether the crop got better, worse, or was neutral over the last week. Just go ahead and chat it in there for us. Sterling, why all the red today?
Well, it looks like to me.
Looks like to me we're having a bit of a macro day. And if we take a look at crude oil, we are noticeably lower. 98.69, down 7.21. Unleaded gasoline down about 18 cents.
Is there some way we can get rid of this echo? I'm hearing myself.
Oh, that's much better. And it's the crude oil is kind of the center of this. The other thing that we need to look at here is our friend the dollar index. And that's actually turned a little bit red for the first time in a while. We're at 107.86 right now, and that is down about 16. The dollar did trade at parity with the euro currency overnight. And we'll punch that up here real quick. The euro currency now, see, we're up all the way back up to 101.18.5. So there you picked up 1,190 bips last night. And if you're a foreign currency trader and you're on the wrong side of that, well, that's a little rough. But there were a lot of ideas that the euro would come down to parity with the dollar and it would bounce. If you think about that, it makes sense. I sell the euro at, I'm really a genius, and I sell it at 112, and it comes all the way down to 100. It's a nice, easy, round number. If you're smart when you're ahead, especially trading something as volatile as a currency, that will certainly, be a nice, easy target, and you want to get out, and you always want to book those profits. So is this the end of the drop for the euro? Is there some news driving that? Well, we'll see. But if you see the other part of my screen right here where we're looking at things like the stock market, that's doing a little bit better today. Unleaded gasoline here at $328.50. I think if we can get this down another 30 cents a gallon and hold between, let's call 310 the high of the range, 280 the low of the range, and I know that stinks, and we'd like it cheaper. But when you get to that point, I think you've taken it from being destructive on the economy to being more of an annoyance. And we get to that point, that's going to be better for a lot of these things. But what's been really hard on the grains has been this big rally in the dollar. Every time the dollar rallies, we tend to see wheat go lower, and that tends to drag everything else with it. Combine that with the weather, we have really a very complex market structure this year. And something I'd like to keep in mind, if we think about like Chinese hog prices, they're up about 50%. Corn in China right now is trading at about $11 a bushel. Right here, we're trading at, let's say $6.15 for September. There's plenty of room in there for China to come in and buy corn. And they are not going to put up with food inflation. They've had too many lockdowns, and they want to keep the public at ease. And that's something we may very well see China want to up their hog herd. When they up their hog herd, you know what that means. They're going to need more corn and beans, and not just from us, but from everybody but to the global market, it doesn't really matter where they buy them. And if we look here with the dollar now actually turning negative, our friend cotton has been beat up severely, and this was limit down just a few minutes ago, and we've come off limit. And we export about 75% of the cotton we grow in this country. So a rise in the dollar has a particularly excruciating effect on cotton sometimes. And cotton dropping as much as it did when we're looking at some of the worst conditions that we've seen since 2011. So they improved a little bit on this report, but I've got some guys in Texas around here, and I was talking to them, and they have nothing good to say about the condition of the crop. So if that moves forward, gasoline prices ease a little bit, that could set a pretty good runway for the cotton market.
One comment from the virtual crop tour last week, Sterling, was that the world's largest cotton field, which it was referred to as Texas, is really under fire. It's tough conditions down there and some pretty severe conditions. I've got a question for you, Sterling. We talk a little bit, it sounds like maybe we're talking out of both sides of our mouths here. We talk about how corn, soybeans may be more linked to a macro effect with a higher dollar and the sell-off in energies. And at the same time, I sensed a little bullish sentiment whenever you pointed to December corn at 604.
And yeah, and I'm not trying to talk out of both sides of my mouth, but we're going to treat this like the weather. Next week in Omaha, it is going to be 105 degrees. In January, I can say with a pretty high level of confidence, it's not going to be 105 degrees. It's going to be cold. And does that mean I go running outside in my parka when it's 105? No. Things evolve and things change. And that's something, if we haven't learned this from this market and the situation that we've seen over the last 2 years with the pandemic, things evolve and things change. So we have to look around the corner. Right now, corn futures are experiencing volatility. But if we look at basis has been pretty firm most places. So just because the futures market's going down doesn't necessarily mean the global price of corn is necessarily moving that much. There are things that can change this. If we take a look at what went on around the July expiration, we saw funds unload almost 100,000 contracts in a week. Part of that was index fund selling because they made some adjustments, and it was the end of the quarter, so we had investors taking money out. Part of that was a change in the risk profile of the July the July futures moving into December, so we had that rollover into what is a much different situation from July. 3, we had a major hedge fund make a pretty big adjustment in their positions, so we put all that together, combined with commercials, knowing that the funds are selling into a fairly empty market. Hands go in their pockets and things go down. So this is going to be very interesting to see what we get coming off of this WASDE. And if we can combine this with the dollar going down, we could see corn prices turn around noticeably and probably rather quickly.
Sterling, you mentioned basis levels making up for where futures have lost. And of course, a lot of commercial elevators rolled from a July futures month into December and some into September in regards to corn. We saw basis levels make up for that spread that was there. One thing that we have seen across the country is prior to that roll, for the most of us in Illinois, Indiana, Iowa, the ethanol market was the leader. We saw them have the strongest basis. We've seen a material change in that, where river markets are competing right now down in Mount Vernon, Indiana, and Shawneetown, Illinois, where a lot of grain goes through St. Louis, Missouri, one of the bigger hubs inside the United States. We've seen that river market be really strong, premiums 10 to 30 cents better than ethanol plants. What do you see happening there? Do you see any fundamental change in ethanol we need to be aware of?
Well, seeing the ethanol market get a little dense, shall we say. Think about the price of gas. We got past the 4th of July, and we have very, very heavy gas prices. I think it's at the level now where people are being reorganized. They're going to try and put all their trips into one basket when they're driving around town. So if people are driving less, that means they're going to use less ethanol. And that's something, once we get past this 4th of July, we start to move into Labor Day, I think the travel profiles are going to look a lot different. One thing that I have noticed, particularly in my travels, being in the hotels and things, the business traveler, like I used to be in my previous life, that guy's gone. That guy and girl, they're not there. I'm not seeing that business dressed person pulling the bag with the computer bag. I'm not seeing them in airports. I'm not seeing them in hotels. So that's going to change the travel profile noticeably. I think you're probably going to see a little bit less driving. And I don't want to be the bearer of bad news, but I did pick up something from the CDC this morning talking about COVID and the fact that the infection rate has doubled since May. Granted, it's probably a much lesser version, but nonetheless, that could have a bit of a chilling effect, perhaps, on driving. And when you do that, that's naturally going to put the ethanol in a little bit of a pinch. We actually saw an uptick in ethanol stocks last week, which for this time of year is a bit unusual compared to, let's say, 2017 to 2019.
Sterling, you mentioned a great explanation there on why we've seen ethanol bids come down and how that's related. One thing that we are seeing that's robust, and that's domestic demand. It continues to be strong. This year, I see we've got a couple of folks on here from the Midwest. And if you're in Ohio, Indiana, Kentucky, Illinois, your 3 primary markets, if you can get to the Ohio River, you've got the export market. You've got ethanol plants spread out through there, but the rail market's really important when we look at the CSX and the NS markets in particular. Now, the Southeast, and Mike Toohill is with us. He's not on the screen. He's with us. We're getting a lot of accounts out of the Southeast, out of Ohio, out of Kentucky, out of Tennessee, that while the crop is not in dire straits, it's certainly hurt. That demand in the Southeast looks to be pretty strong. Will these rail bids, I shouldn't ask that question. I believe the rail bids will be really, really strong, especially in early harvest. Sterling, who chases those? Is it the export market primarily that chases after that rail initially, in your opinion?
Yeah, this is going to be, I think we can see if the dollar breaks. That's, again, one of the biggest things that we need to take a look at. Seeing energy prices and things like that come down certainly helps the export situation. We have a lot of bottlenecks right now, particularly in the port of Oakland, where the state of California grows 80% of the world's almonds. Those almonds are stuck there. Almond prices have collapsed because of this bottleneck. But we've had several weeks of lousy export sales. Well, you combine fairly high prices and a strong dollar, you should get lousy export sales. But most of it was a lot of switching and things of that sort, and that's typical this time of year. We haven't seen China come back in the market too directly, but we can definitely see that export situation improve, and it's something that can improve globally. For example, if we need to move corn and soybeans into the Netherlands, which, again, that moves directly into continental Europe, we've seen more activity there than we've seen ever before. So exports can and probably will turn around and pick up, and that's not even really addressing the situation in China.
So you mentioned exports there. I think that's something that's really important as we go into this WASDE report, Sterling. We've waited months for an adjustment out of the USDA for the Ukraine situation. It's something that we started looking at back in March, April, May. We had the expectation that exports out of the United States would increase, and thus our carryout, especially on corn, would decrease. We really have not seen that adjustment. The USDA continues to stick that carryout number on corn relatively high versus what it would seem it should be if we don't get that Ukrainian crop out of the Black Sea. Over the last week, I guess it was last Friday, maybe the week before Friday, we actually saw a vessel leave a port in Ukraine, which was a positive development if you're on the supply side of things. It would seemingly make it seem like Ukraine might get that crop hauled out. You and I know that we're a little bit more pessimistic on that than most, but why have we not had the adjustment yet in WASDE, and is that something that we can see today?
Now, the USDA can adjust anything anytime they want. They could put out a special bulletin about it on any given day. They could put up an appraisal. The market makes its own appraisals here. And right now, they may not be putting out because they may not have a clue. That would be my nice and virtuous bet that they really don't know. And I can take that as a legitimate answer. It's a war zone, and we don't know how Russia is going to behave about this. Are they loading up the grain and taking it for themselves? How is, planting seem to go okay, but where are we going to be with the corn in terms of harvesting it? In terms of moving what's on hand, it's been limited. It's been slow. This has had a bigger impact really on Europe than it has other places. And, the longer we go on without resolution of the situation, part of the reason the dollar is so strong is Putin being in the Ukraine has sent the euro plunging simply because he controls most of their natural gas supplies. And if you've ever been to Germany, windmills and natural gas, it is, in fact, a very green country in terms of how they generate power. That's a good thing. The bad thing is they can't get any exports from us because of the situation in Houston with the Freeport loading dock. So that has put them in a very precarious situation. And at some point, especially as we start moving towards fall, this is going to have to start to work itself out one way or another.
So Sterling, we're a few minutes from this WASDE release, and I think if we were guessing on this one, we would say it was a yawner, but you have to remember the fireworks can come out at any point in time, especially when it comes to corn or wheat. What are we looking at as base numbers right now that we should be paying close attention to for the next few minutes? Is it a corn carryout number, wheat carryout number? What do we need to be focused on?
Well, let's see how I can switch my screen here real quick. And look at that. That was smooth. Almost like we're at home. We're actually in a hotel in Kansas City, and I'm operating on a laptop. So the things we need to look at. First of all, the USDA very seldom, once in the last 12 years, and it was 2012, that they addressed corn and soybean yields on this report. Seeing them change that would be a big surprise. They do, however, address cotton yields. The other thing is we just had an acreage report, and that is going to move the soybean ending stocks number. That's probably the biggest wild card here. Right now, the street is looking for 206 on this. We had a range as low as 140 and a high, I believe, pretty close to the same as the last one at 280. So seeing this number come in around 170, 180 would probably be bullish. If the corn ending stocks number, that's probably, we're looking for 1437. That's a little bit higher than it was the last time, and corn production being a little. Now, other things that they could change. They could change the export number. They have done this in the past, but it usually isn't a big change. So again, not looking for a big surprise there. Where I'm really looking for surprises in the soybean number. The wheat number, we're at 637 versus 627. There shouldn't be any surprises there. The cotton ending stocks number. With right now we're at 287. The prior was 290. I saw things that were coming out from, you talked about the world's biggest cotton field. That would be Texas. And we got some stuff from my friends at Texas A&M, and they're talking, could see this number as low as 240. So if we see that, combining with the dollar that I think is still softening a little bit, that could be very interesting for the cotton. The cotton conditions have been horrible, yet it managed to go limit down 5 days in a row. That's when I look at these things, I look for things that don't make a lot of sense, and that's going to be up there in the top 20 lifetime things that don't make any sense. Because that.
It doesn't. Sterling, you mentioned that bean number, and if you follow the trail of beans over the last few WASDE months, you go back 6 months ago, prior to the South American harvest. That was the big change for our ending stocks. We didn't really adjust our yields here or acreage here in the United States from last year, but we had a number up there around 380 million carryout, and it looked as if with an average crop out of South America that could go as high as 450, 460. That didn't pan out. A lot of underperforming crops in Brazil, especially the southern part, and Argentina. Haven't been down in Argentina over the last couple of weeks. I can tell you that drought persists Sterling. We were in Santa Fe province, and our plans to stay at one location changed because of the aquifer that supplied a water well had gone dry. So I think you make a very good point. Anything that if we happen to drop below 200 million on that ending stocks puts a tremendous amount of pressure on Brazil, and that risk period, of course, is going to be planting time down there, and the major growing season. So we're going to have some fireworks for months to come.
Absolutely. If there's any problem with the Brazilian crop, and I was talking to my meteorologist yesterday, and the La Nina that we're in isn't really showing too much sign of breaking. And if we see that, that could present, some unique problems, particularly for Argentina. It doesn't affect Brazil as much usually, but if we see that, again, Brazil struggling, that is going to be very supportive for prices. And we're going to look at another number today that may be a little bit different. What I'm highlighting right here is the world corn ending stocks. Right now we're looking for 310. If the USDA were to address the Ukrainian situation, that most likely it would print right here before it works its way through the rest of the balance sheets. And again, the soybean ending stocks at 99.18, so we're looking potentially a little bit of a reduction there. So we have a lot of moving parts, and this is the lead up. The August report, usually we see yields getting addressed for corn and soybeans. And again, around eastern Nebraska, what I see variation. It's very uneven. Some things look great. Some of the other corn that I looked at was 2 feet tall. And, knee high by the 4th of July is kind of nice if it were 1951, but it's not 1951. So I think we have that as a potential concern. The other thing, looking forward to harvest, if we've got some crops that weren't maybe as well fed as we'd like to see them, that could easily result in, oh, this stuff looks great, it's going to be great, and then we see, yields that are not so great. We are about 15 seconds away from getting a report here, and here we're working on a smaller computer, so we're kind of limited here in screen space. So we'll put the big numbers right here, the corn ending stocks and the soybean U.S. ending stocks, and then we'll look at the rest of them as they come out. Soybean ending stocks came out at 230. That's a little bit above expectations. Corn ending stocks came out at 470. That was a little bit above expectations. And let's see what we have for world. Actually, let's look at the cotton here. Cotton market, cotton ending stocks, 240. My boys in Texas called it right. That should be good for the cotton market. And let's see what that world corn ending stocks looks like up here. World wheat, world corn ending stocks, 313. So that number is a little bit bearish. So the report is neutral, maybe a smidge bearish with no big great shocks to it here. Let's take a look and see what prices are doing now. Let's see here if we can share this. Let's see.
Sterling, while you're doing that, it seems like so often we have the anticipation of the report release, and 5 minutes later, we're already talking about what to look for next. And I'm going to go ahead and go there. And it's all about yield at this point in time. I think that we talked about it a little bit in the virtual crop tour, that we're 2 to 4 weeks behind normal pace. And if you look at the markets and you see these big market moves over the last week, it's not a coincidence. The market is mimicking our growing season, and where we usually see that volatility June 15th through July 4th, we may have moved that back just a little bit today. Just some commentary on corn and beans, 1.47 billion number. That's a very high number that's been printed for corn carryout. Again, no adjustment, at least seemingly no adjustment for the Ukraine situation. And the bean number, a little bit better than expected there too, but still should keep things on edge.
Yeah, we're definitely seeing some selling pressure coming in here, and we'll punch up the corn market here real quick. And as we can see here, corn is feeling some pressure across the board here. We're down 27 to 30. When the report came out, we were here. We'll just make a chart of December here real quick, and we can take a picture and look at this live. And And as you can see, prices came down noticeably right here with the report. But again, you know, you get the initial report shock, you get some algorithmic trading coming in there. People let's sell it on this number, boom, you sell. And very often, 5 or 10 minutes later, we're right back to where we were. That is not that uncommon of behavior. And looking at soybeans here, SX2, down about 45. And as you can see, when the report came out, we dropped noticeably. And now we're kind of bouncing around a little bit within where we fell. And let's take a look at wheat here. Kansas City wheat, down about 21. And that also plunged, but see, the recovery is already beginning to, you know, we were 895 at the lowest level. We're all the way back to 903. So seeing a little bit of a recovery there. Let's see how our friend the dollar's doing. Well, look at that. We're still 107.81. We're dropping a little bit, so that's probably going to be the single biggest thing. We were looking at a really big macro headwind coming into this report, and I'm not going to say this report was extremely bearish because it wasn't, okay? A little bit of corn got added to the ending stocks, but not that much. We added acres. Yields obviously weren't changed very much. Soybean ending stocks stayed a little bit elevated, but again, you know, we're at 200 million. It doesn't take a lot to suddenly turn that into that 180, 190 number, which tends to get the markets moving a little bit.
So, Sterling, we kind of paint a picture of a perfect storm here over the next few weeks. With Mike being with us and a lot of feedback that we're getting from the country. There, Sterling, that have done their best to calculate Ukraine into this situation, which means more of a burden on the U.S. to supply the world with corn. You know, that number could be as low as 800 to 900 million. I think that's probably the extreme view, but we've got to keep in mind that in an instant, that 1.47 billion could easily be 1.2 billion, which is a dramatic cut. All in a report, and we've got some key reports coming out over the next couple months. One of them, I believe, is August 12th. The FSA is going to redo the acres. That in and of itself can adjust balance sheets probably more than anywhere else. I think we were both shocked on that June 30th report to see bean acreage as low as what they were, over or under those acres coming back up in August.
I think we're going to see some double-cropped beans come in, and we may have the potential to get a little better than expected performance out of the double-cropped beans. The thing is, it's not that much. I don't know how much of a needle mover it's going to be. Something to keep in mind with the corn, we're looking at about the 88 million acres getting harvested. What are we at on harvest acres? 83 million, right? About 92%. About 83 million. So every loss in 1 bushel per acre, we lose 83 million off that balance sheet. If we lose 3, that's 250 off. Figure you're going to maybe lose somewhere else in the balance sheet, but you can figure that'll take 200 easily off of ending stocks. Because some of these things, the feed demand isn't really going to change that much unless we see prices really get materially back into the 7s. Exports probably not going to really harm those, especially if the dollar can ease a little bit. Ethanol numbers, it's not going to be enough to make up for that. So we are, literally, where we're going to be in September. Some of it's going to be decided right now, over the next 2 weeks, and how things actually perform. And I know the forecast, looking from Omaha areas east all the way across Iowa, it's going to be hot. And there's not much chance of much precipitation really in there. So that late planted stuff, there's definitely going to be some risk. So I would expect this sort of volatility to continue. We would be having a lot more upside volatility if the dollar weren't so strong, but one day it will come back down. Yes, it will. and that's going to induce volatility, but we can expect this, extreme weather behavior to continue.
Let's talk about just very quickly, if you are an agent out there or a farmer that are listening, some strategies you may want to employ. Um, Call options on corn. Certainly, I'm never a huge, you guys have heard my advice on here for a long time where we normally like to place the floors with unlimited upside. If you've got existing contracts out there, if you've made some contracts over the last 4 weeks, this may be a good opportunity to buy that call option attached to those contracts. It's going to give you some more confidence to make additional sales in the future. If you're in one of those states that's on the fence, maybe a little late this year, I think it's a prime opportunity to do that. In regards to soybeans, I've got a little bit less inclination to try to buy those call options on soybeans and just let the market work a little bit over here over the next 60 days. Remember, we're not that critical time period in the calendar year when it comes to growing that soybeans, as they're going to come a little later than corn. And corn, we're right in the middle of this volatile period. Sterling, if you had to pick out a call option right now, no pun.
Okay.
You're looking at that. What would you pick out?
Well, taking a look at the call options here. Let's look at September corn. These are September options. These have 45 days to go, so we're in a pretty good spot. If it were me, I would buy the 630 call for 24 and the first call at 25 cents. I would sell the 670. So if I get 15 for it, means I pay a dime. I have a profit window 40 cents wide. I pay 10 cents for it.
You're looking at the September there, so we've got upside through expiration about August 26th on that. Is that right?
Yeah,
that is correct.
Okay.
So you'll be through pollination. We may have a little bit better picture of what the global conversation is, I hope, because this has been a really interesting time for me. I've never seen, if you want to talk about a compass and hearing people talk, I've heard 360 degrees of scenario, everything around the circle, and maybe half a degree's in there. So there's a lot. Uncertainty is the only certainty right now. And we see a little bit of weather issue, a little bit of dollar issue. There isn't a lot here, where prices are that can send them, I think, too much lower. There's plenty of things that if one thing changes can create some upside in here.
I think that's the comment to take away from this meeting is it does seem as if there is a level they can go down to with a lot of things that can add some fireworks to this. There has to be behind the scenes a war on inflation. The situation, is severe in a lot of places where we see, of course, the interest rates or something that happen, the hikes interest rates or something that happen on the stage. Behind, if you are doing your best to control inflation, what are some things you're doing on the commodity side to try to help quell that a little bit?
Okay, so let's talk about commodities inflation a little bit. A loaf of bread, a bushel of wheat. Depending on the type of bread it is, you can get 50 to 100 loaves of bread out of that. So if it's whole wheat bread, you can get 100 loaves. So if a bushel of wheat is $10, you got 10 cents worth of wheat in there. The cost of that wheat, you've got to get the seed to the farm. That whole thing is all powered by diesel fuel. That is where the biggest harbinger of all of this inflation is. It's not so much with the base commodity, depending on what it is. If it's coffee, yes, coffee goes up, you're going to notice that. That's something that's going to happen immediately. If I'm trying to control inflation, what I want to do is I want to get energy prices under control, because it works three ways. It's inflationary, it's recessionary, it works as a tax. And when you have those problems combined, that produces inflation. The other side of this is we have a help problem. We can't find help anywhere, and until we figure out a way or we grow our way out of it. Meaning, those jobs, I'm seeing fast food jobs in Omaha now paying $22 an hour. That's up from $19 3 months ago. At some point at $24 an hour, you're going to start seeing automation. You're going to see kiosks. Things are going to change simply because At that point, it becomes cheaper to automate and it will take over. Until we grow through that, until we get past the inflationary problem within wages, which I think we may be looking at one more quarter, then all of a sudden things can trade a little bit more freely. Now, on the subject of interest rates, we're looking at the 10-year rate right here. This looks a little bit different. 291. We peaked at 350. Interest rates have been coming down. I think we're in a recession right now. I think we are probably on our way out of it, but it's not a recession like 2008. It is a dislocation and relocation recession, meaning all of that dislocation that went on during the pandemic, like that business traveler. The airlines are trying to figure out, what are we going to do now that Sterling's not riding on American Airlines 175 times a year and staying 105 nights in the Marriott? And all of his little friends there in New York aren't doing that either anymore. That's going to change things, and you're going to see areas where we have good growth for a while, bad growth for a while. We looked at problems with retail. You know, for example, Target stores got beat up. Well, they didn't get the inventory right. Well, kind of expecting them to come out of the pandemic and get it right might have been a little bit too much of an expectation. So what I could see happening is inflation, as soon as we're going to get 3 numbers this week that are going to matter. If we see, as soon as we see that month-over-month rate drop off, I don't think the Fed's going to be that aggressive. I think we get 75 more. After that, as long as we see this 10-year continue to move down and crude can stay lower, I think we may be in a situation where we'll see inflation kind of calm itself. See here if I've got an update on the cotton market. The only bullish thing on this report, the biggest bullish item was the cotton market here, and it, you know, what did it do on the report? My quotes are delayed, but we do have the report time in here, and picked up a little bit, doing a little better, and you can see this flat line right in here. That's when it's trading limit down. So at least it's come off of limit down. But again, a neutral report for corn and soybeans and wheat. A little bullish for cotton against a very big macro headwind. Now you want to see some good news? I got some good news in here for you. Crude oil, 96.17. That's down $7.92. In this chart, if we look here, you can see this is an uptrend. Does that actually look like it's a downtrend? Have we made the elbow? Did we make a V-top?
Interesting to see. Doesn't look like it at this point in time, but you never can.
Well, that's what a top would look like, though. And we've been at least consistently lower, meaning it's not causing more destruction. That's the good thing. And our little friend RBOB, gasoline, and much the same story here. And again, if we can get prices, RBOB, back below $3, that will take them a full $1 and change off of those big highs. That will be relief at the pump. People will begin to notice that. Hopefully we don't get too much at the grocery store.
Well, Sterling, it was a pretty eventful report for this time of the year. Like I said, we usually switch back to more fundamentals right after this report is over, and I suspect we do the same. To recap the report very quickly, on the big three anyway, maybe a few more beans in the pipeline than we thought, just slightly, but still it puts the market on edge. Corn, again, we printed a number of 1.47 billion, which seems like a big number. Seems like that number could only come down a little bit in the weeks to come. Time will tell. Wheat fairly neutral across the board.
Yeah.
Of course, cotton, as expected, a little lower.
One thing here, I haven't had a chance to break down the report, but where our gains came, it didn't come from any more corn production. They threw a little bit back into old crop ending stocks. So that means they found some corn somewhere, and that is actually home, and I'm on a bigger computer and I'm not in meetings. But the old crop, they added back in a little bit of old crop soybeans as well. So that does account for most of the changes. As far as the wheat ending stocks, 639 is right in line, no big surprise.
Well, very good. Appreciate everybody tuning in. It's kind of nice to do this thing face to face. We haven't done that one before, and we really weren't set up for it. You can kind of tell that. You got my coffee mug in front of the camera a little bit, but we appreciate you joining us here in Kansas City, and look forward to the next one next month. Christy, what day we have ours next month? Do you have that on top of your head? Seems like the 12th, yeah. And in that report, we're going to look forward to some new acreage numbers that are going to be available. And we'll do it all again for you on August 12th. We'll have a better idea of what kind of corn crop we So we'll look for some new acres out there. We appreciate your time today, and thanks for joining us. And we will talk to you next time around.
Later.
Later.